Okay, welcome back. If you've been watching the videos today, starting from the pre-market to the IB low situation, um, there's a good chance that we're going to take out the C low. But notice this very quickly. I want to highlight this right there. Okay, so we're 10 minutes into the C period. Okay, and what I want to point out about this is this video is mainly for people who will continue or have been watching this, and to illustrate why you know the chart may look busy or noisy or whatnot, but why these overlapping areas, what they mean, or why they're important. For example, here you have the blue overlapping the gray. Okay, and so it leaves this little spot right here, this little edge. See what happened here at the C. Okay, so at the time, I'm going to split this off. The VPOC, the volume point of control, again, another word that I think is it's just there's just so many. It is missupplied. Okay, so here's the volume point of control. Okay, that's where the most volume has been in the initial bounce. Okay, so when we open down here, there's a pretty good chance the way that you got to notice the B period. Compare the range of the B period to the A period. It's probably I mean, I didn't measure this out. It's like it's a little more than half. It's maybe 2/3 the size of A. We didn't get a lot of extension below A. Okay, so this means a B low might become the low of the day, possibly. So when we opened up here, one of the things we want to watch for whenever we open a TPO and it's a situation where you're near lows of the highs, are we going to get a reversal pattern? So that's what we would have been watching for. And this is where one of these little areas could become increasing the likelihood that we might get that at least initially. So when I say at least initially, we were down here twice now. I was kind of watching it sitting in across. I wasn't sitting right at the desk. I was watching. And I'm like, we came down and we came back up, and we held right here on this edge. For the first 13 minutes, we've held here 73 down to 70 quarter base, 70.50. Contained. Again, every one of these little areas, they can be useful. It doesn't mean you had to short there or something like that. But again, if somebody was long, hey, you better take some out in here because their sellers might step in, and they did, and push it back down again to the low. Now, what I was watching for, are we going to match the A low and then come down and come down to B, even make a poor low possibly before going back up, or there being continuation? So twice down, and nothing happened. It didn't even get back down to the A low, or even one more tick. We'll take out the C low at that time. So what I'm trying to explain about this is that the range in B was significantly, in my opinion, smaller than the A range, given the nature of the sort of liquidation or the sell-off. Okay, the extension below the A was not very significant either, or so it was not very significant either. So when we have this little potential of a reversal pattern, and realizing that the VPOC is up here, the odds of having a reversal pattern and finding it where to once we tick down and tick back up through the C open and enter this distribution right here, odds are pretty high we're going to go at least, let's see, 1, 2, 3, 4, 4 to 5 ticks, even if it never got back through the VPOC. It's just very often, this is an area where the market will come back to. If you saw this like on a 5-minute chart, and it'll you can imagine the bars or candles, and then they have a retracement, and that's sort of like what that is about. In this case, it kind of went through it a little bit. Again, very often around a VPOC, there's a little bit of back and forth. Because we entered this little blue zone, you might have expected that we would go to the other side of this distribution a little bit. And I'm talking about this part of the distribution because there's a little bit of a low volume just above it. And now, right now, we've just gone beyond what would be if the distribution was defined this way. So now we're kind of falling back in it. But we're also potentially getting sucked in back to the upside here. See? and the gray. So there's all these dynamics. And again, this is more of a how-to video of navigating, like what's with all the overlapping areas. I mean, you know, all this kind of stuff. Well, that's why those kind of things. I also had an example earlier in the I think it was when I was doing the 1 minute drive-by. Well, it's actually a 30-second chart, but way back here, where this is it right here in the Asian part of the session, when the Asian market's open. Here we had this little zone in the middle of this gray zone. Stop to the tick. Okay, so that's what I'm saying. Now, it's very easy to look at these levels and zones and support, resistance, trend lines, pivot points, you name it, inflection points of all sorts in a two-dimensional way, okay? Again, I've referred to it sort of as like if you looked at, if just trying to help with understanding the gray areas where the tendency is to move to the other side, kind of look at it as like these are mountains. Like this is the plain and this is the mountain, okay? And it's going to go, you know, it may have trouble getting over the mountain. I mean, if you could flip it around too. You could make that like a valley. I don't know, whatever works for your mind, okay? The point is that this becomes, if you think of it in a three-dimensional way, then you begin to see it a little more clearly. Now, that could be, we could make the topography extremely detailed with different importances to these, you know, these little regions. But you want to kind of keep it simple, you know, because it really doesn't matter what you think, how important you think they are, or how important they look. It's how important are they when we're trading there. And you have to use other tools to discern that. You're looking at the volume. You're looking at the pace of tape. You're looking at who's lifting the bid and are they getting, who's lifting the offer and who's hitting the bid and are they getting anywhere? You know, those kind of things. See? All right. So this was more than I was taught in market dynamics and understanding. And this, I don't know how long this 8-minute video so far, then I was taught spending lots of money for a long time. You know, I can't exactly say, I just be kind of just using something sort of hyperbolic here to express that. But all I'm saying is, you know, this information, which I'm putting out here for free, is coming from me. Nobody taught me this. And I was paying people to teach me how to trade. They taught me things, you know, I learned things. However, what I really needed was understanding and a little help. And, you know, once they had my money, they had their little bit, you know, the little toolkit. That's all they're selling. You know, I don't know. I don't mean to be too harsh about it. But all I'm telling you is that that this, even understanding that, looking at it in 3 dimensions, even learning, you know, that's stuff that you don't hear everywhere. That's all. I'm not the only one who maybe thinks of it that way or understands it. I mean, that's no claim like that. I'm just saying, like, you know, when I'm sitting here talking to no one, nobody's watching, or I get 1 or 2 hits on a video, it don't confront me none, okay? Because the proof's in the pudding, you know, and there's the pudding.